Okay guys, on today's video, I'm going to be giving you a comprehensive guide on how to trade on the Bybit derivatives section. As you can see here on the Bybit app, you have your Bybit derivatives. So I'm going to show you how to make money each and every day, every week on derivatives trading on Bybit. So once you come to this section of the application, now, trading on Bybit derivatives means you're buying contracts to either sell short or long. So, what we basically can do at this section is that we can make money if the price of any particular asset goes up, we make money, and if it's also dropping down, we can also still make money in the market. So, we could take advantage of the increase in price or the decline in price as well. So we now have this section over here where we place the whole trade. Now, if you come to the first section where it says Matic USDT here, this is the pair in which you want to trade. So if I want to trade Matic USDT or BTC, for this example, let's assume I want to trade BTC. So I'll just click on this Matic USDT and I'll change it to BTC USDT. Now, if I change this to BTC USDT, it simply means I could trade the price of BTC. If the price is going up, I could trade it to make money. And if it's coming down, I can also trade it to make money. So the pair in which I select is BTC. The next thing I want to do is that I want to check the isolated. If you see it at this side here, we have what we say the cross margin and the isolated margin. Now, if I select this to be in the isolated margin, just as it is here, it simply means I want to buy with, if I want to buy, let's say inside, I have a balance of $100 now, and let's assume I want to buy with only $20. I want to take that trade with only $20. If I set this to isolated and I take a trade with $20, I'll only go inside the trade. The trade will only be running for $20. And if the liquidation price for the $20 gets, I'll get liquidated. I don't know, maybe you're understanding my point, but let me just like refresh again. Let's assume I want to take a trade and I want to take a trade with inside this $100 now. I want to use only $20. I use $20 to get into the trade. I'm only risking or spending $20 on that trade if I set it to isolated. But if I set this to cross and I enter a trade with $20 and that $20 gets liquidated, the thing will cross over to my initial balance, which is the remaining 80 balance I have, which I did not enter a trade with. So that is just the difference between the cross and the isolated. Then I'll set this back to cross because this is what I like using. Then the where it says 30x here. Now this is the amount of leverage you can use on each and every trade you want to take. Now, what leverage help us to do is that leverage give us the opportunity to make more money even with a little capital. So I've been doing a flip of $35 to $100 just as you can see in the series of my video. And you can see that on that flip, today is the day 19 and I was able to take $35 to $100 above. And if I'm to just do that on sports, I will not be able to make that kind of profit unless maybe there's a high impact in price. So that is just the advantage of leverage. Now, with leverage, I can take a trade with $5 and increase the leverage, and I'll be making more profit. So let's say I have a $10 account and I want to take a trade with $10 and I set this to be 10x. What I'm telling the market to do, what I'm telling this platform to do is that, okay, I have $10 and I'm putting in 10x. I want you to multiply that $10 by 10 for me. That is the amount of trade, like the profit you get. So if I have $10 and I use 10x, it's just I'm saying 10 my $10 times 10, that would be $100. So it'll be like I'm using $100 now on that particular trade. So that's what leverage does. Leverage just help us increase our capital. Like this, a borrowed increased your capital now so that you'll be able to make more money from the market. Now, the backside or the bad side of this is that the higher leverage you use, the more money you are going to be making, and the higher leverage you use, the easier you get liquidated. So you want to stick with a you want to just basically stick with what your rule management and everything has in line together. But that's just the whole essence of leverage here. It just give you the opportunity to make more money. So I love to use, depending, I can use any leverage depending on my risk management and all that. So the next section in which we have here, we have this box where it says limit, market, conditional, chase, limit order, scrape order, and the rest of them. So the most important thing here that I've been using is just this limit and market order, and I'm going to be explaining it. Now, let's say you want to trade BTC and you have a limit order. You have a particular price in which you want to buy. Now, let me give you a quick example with this chart in which I have here. Now, this is the price of current price of BTC, as you can see over here. And just as I tell you, we can make money if the price is dropping, and we can also make money if the price is increasing. So what I see right here now is the price of this market dropping. The price is dropping, and I don't want to buy immediately because I still see a retracement in the market before I get into the market. I don't want to buy immediately. I'll be using this section over here as, like, this is where I want the market to get to. This zone in which you see here is where I want the market to get to before I now sell. So that I'll be selling at a buying short at a more cheaper price. So this is where I want to sell, and this is where I'll be taking the trade. So I will set a limit order now, and that is the advantage of this limit order, which you see here. You want to wait for the price to get to a certain point before you enter buy or sell. Now let's go to the limit order and how to set it. Now, as you can see here, I have the signal for this trade already set up. The entry says 66,567.8. So that's what I'll be putting in the limit order. 66,000, what's that again? 567.8. 567.8. Now, this would be my entry price. Like, this is the price I want the market to go back to before I sell short. Because the market is selling short. The market is going down and I want to follow it to sell short. So this is the price I wait to take a trade at. Now, we now have where it says, once you set your limit, then you see this box where I'm moving here. This is where you can know how much you want to use to take into that trade. If I set this to 50%, it means you'll be using $50, about 50, because I have an available balance of $100. You'll be using about $51. If I move this down to let's say $25, you'll be using an average of $25 to take the trade. So you just want to set it to the exact point in which you, to how much you want to use to take the trade. So let me just take this trade with, let's say, $10 or $12. Now you can see that in the cost here, you can see the value of what you'll be getting, and you'll be seeing the cost, which is 12.89. Now, where it says TP/SL, this is another side where you'll be able to set your take profit and stop loss for the trade. So if you click on this TP/SL, you'll see this box will come up. Now, once you click on that, you have to know that we have long here and we have short here. If you are buying long, you want to stick to this, and if you are selling short, you want to use this. So I'm selling short for this, and I'll just be using the short section over here. Then you see where it says target profits. This is where you'll be putting your take profit price. And if you see in this our signal here, our take profit is 60,578.4. You impute that at the take profit section here, which says 50,000, or is it 50 or 60? 6578.4. 6578.4. That will be the take profit price. And the stop loss, which is more important, is 68,000. Wait, let me see this. The stop loss is 68,313. I think I made a mistake on the real one there. 68,313. 68,313.3. 313.3. So as you can see it here, if the trade goes in my way, if I take a stop loss on the trade, you already see this one in the red. I'll be losing $3.4, and if the trade goes to my take profit, I'll be getting $11.97. So this is what you also want to put in consideration, so you'll be able to calculate your risk properly. And let me see, this is a 3 to 43 risk to reward ratio. So once you now have all of those set, you click on confirm. If you click on confirm, you are okay with everything, then you click on sell short. As you can see where we have the type on here, sell short. Once I click on sell short, you see there's an open order now at this place where it says open order. You see position, you see order. Now this will place an order for BTC when the price reverse to this our entry price. This is our entry price here. This will place an order for BTC when the price reverse back there, and this order now will now be in my open position. I hope you're understanding the whole aspect of this. But for now that the trade is not yet open, I have not yet bought any pair to sell long or short. So it's now in my other position over here. And that is it for this limit here. Now, after the limit, we now have what we call market. Now, this market is if I want to buy immediately at the current price that BTC is trading. Let's assume I'm okay with the price right now. I come to my chart, I'm okay with the price. I can take a short trade, then I'll use that market. Now, the market order will help me initiate the trade immediately, and that will be in my open position once the trade is initiated. But since I'm not ready to initiate a trade now, I'm just only using the limit order. So that is it, guys. That is just the simple analogy to trade on the BTC, on the derivatives on Bybit. And if I use a limit order in my other videos, I'm also a market order in my other videos. I'm also going to be posting that for you to see. Now, this method could be used for either you're buying long or you're selling short. So it's just the same process all along. So, guys, that is it for this video. And if you're not yet subscribed to my channel, you can leave a like in this video and subscribe to the channel. I drop quality content on cryptocurrency trading in general. So for our flip, we're still here, and as you can see, if you've been following my trading flip all along, I'll do a special review for that. So on the 1st of March, I decided to flip a $35 account to $1,000 account, and so far so good. We are on $100. That is, will be in 19 days. We are now at $100, $108. So this account I'm trading alongside, I'll be trading it to $1,000. You can watch my previous videos where I did reviews on how I started trading the account. So let me just do a quick recap. So this will just cover the episode 5 or so. Let me change this to all. So as you can see my previous trades on this account, this is it. This is it. This is my previous trades on the account. Let me just view my trading performance. As you can see, this is it. Not yet updated. I think my today's trade hasn't updated, but let me just change this. Let me just change it to all last 30 days. As you can see, so the trade hasn't updated, but here is where we are as at today, as at this trading video so far. So I'm going to update you on the next videos as well. So right now we are up by $100. We already made some $100. I think this is where the last trade I took, which I took those losses. These are the account review. These are the losses and these are the winnings. These are the losses and these are the winnings so far on this account. So that is it, guys. See you on the next video.